I am trying to get a sound level. Okay, that was the worst start to a live show I've ever been involved in, but thankfully we can move on from that. I'm a little surprised that no one told me that my mic was on, but having said that, I'm a consummate professional, so I'm going to make the best of this show. This is Aidan Doyle reintroducing the On the Money Show. I hope you heard my theme music, and I wanted to say, or you could have heard me say if there was any sound, that you'll probably notice that I'm in a slightly different outfit today. The reason for that is I am wearing my doctor's hat, and I intend to examine, analyze, and diagnose what is wrong with the US economy. Okay, I had a call from this dude, this very important guy called Obama. He asked me to take a look at things and get back to him with my interpretation of events. So here's what I've discovered. I'm going to write out a prescription today for financial health for the US economy, and here's my doctor's notes. Anyone that knows doctor's notes knows that they're probably badly written, but I will do better than the average GP. There are 3 prevalent problems with the US economy. In order of importance, I am going to list them for you. Number 1 is investor confidence. Okay, that's self-explanatory. I hope I don't have to explain that expression, but in keeping with the theme of the show, let's keep it simple if you can. It means as follows. It means that the people that would normally buy stocks and not think twice about it have decided to stay away. They're not happy with the way the market's behaving. They are concerned that their money is going to fund junkets for the likes of AIG Insurance Company. They are worried that their house values and real estate values are plummeting. And quite simply, this is a byproduct of fear. Okay, there's not much that can be done about lack of confidence, but I will say that at the time of speaking, I'm impressed and surprised that Paulson, I believe he's the Secretary, Treasury Secretary, is stepping up to the plate, as they say in America. Paulson has done the following. He has realized that there are 3 fundamental strategies to take. One of them is capitalization. That means, give me a graphic on capitalization. That means that he has decided that if the high street banks are in trouble with any assets on their books, he is going to step up and fund them, bail them out, finance them, underwrite them, secure them, pick your own verb. All right, I'm not in love with the expression bailout because it implies that someone did something wrong and had to be rescued. A lot of these events, ladies and gentlemen, are the product of market forces. That means no one could foresee them, but it doesn't mean that if they do come along, that nothing can be done to alleviate them. Okay, before going into the second part of the prescription that I'm going to write out for the US economy, we're going to talk about what got us here. Okay, a lot of it is to do with, going back to point number 1, investor confidence. Just like any company, bad management can also impair things. We have a lot of good momentum going for us in the States right now, ladies and gentlemen, and I'll be honest with you, a lot of it is to do with a change of management. Now, normally in a corporate sense of the word, that would mean new CEO, new president, etc., etc. But we're talking in American political terms. We have our first black president, and regardless of the ethnicity and the racial connotations and the significant step forward, etc., etc., it's a momentous occasion, and the economy is going to feed off of it. Okay, that's capitalization. Now, does anyone know the name of this show? I named the show Take 20 trillion of these and call me in the morning, because that's what the Secretary of the Treasury has actually done. He has decided he is not going to stand idly by and let the US economy go down the tubes. And I give him kudos for that. I am impressed, and I would like to say that those critics of the outgoing administration should be thankful that they elected Paulson to be Secretary of the Treasury. Okay, I've simplified this entire situation, but naturally this is a 28-minute show. There are textbooks written about economic policy, market forces, the real estate crisis, you name it. I've got to read some notes here. Now, I try to keep it simple, and I'm going to do the same here that I've done in the last 12 shows. My doctor's coat says radiology. Now, I always put a lot of thought into my shows. I selected radiology because radiology is looking at the underlying problem. It's X-rays, it's CAT scans, it's seeing if there is an integral damage to any of the tissue or the underlying structure. I concur and I diagnose that in the American economic financial system, we have no broken bones. We have no major traumatic damage to any tissue. What we have is a poorly perceived state of affairs which can be resolved and turned around by making a few, and I mean a few, minor adjustments. Okay, it's psychosomatic, okay? I like that expression, and it means as follows. Sometimes you can bring sickness upon yourself and it feeds off itself, such as, quote unquote, lack of investor confidence. Okay, I've now got to the point where I've told you what the problems are. Like any good practicing physician, I would like to diagnose and prescribe a solution. Okay. Like any other cautionary tale, and this is one of them, the Dow Jones trading to 8,000 is a calamitous state of affair. Like any other cautionary tale, most of the irresponsible press and media out there will want to point fingers and accuse certain situations and lawmakers and parties or groups of instigating and basically contributing to the catastrophe. In the case of the last 6 weeks within the financial markets, we have had certain pariahs, certain scapegoats, follow me please, and they've taken the brunt of the blame. Here are your scapegoats, ladies and gentlemen. Hedge funds. Now, I, like everyone else, kind of jumped on the bandwagon a little bit by giving hedge funds a hard time. For those that don't know, I haven't done a show on hedge funds. I've indicated in previous shows one of the strategies of a hedge fund, which is to sell short positions and effectively bet on the company in question going down or spiraling downwards, or falling out of favor, or if you want to use a more practical expression, losing. They like to bet that companies will lose. Whilst that might not be quote unquote American, as one previous president indicated, it's perfectly legitimate trading strategy, and you have to understand it takes two sides to make a market, ladies and gentlemen.